Welcome to another episode of Price Targets with your host Bitcoin Jack. Welcome back, guys. After last week's 23 minutes of bullish propaganda, we're gonna continue the bullish propaganda. We're gonna cycle through the charts that we looked at last week and maybe introduce a few others. Before we do so, I want your attention for Backpack. That Backpack has been a place that I've been testing and trading for the last couple of months, and I'm truly enjoying everything they're doing, all the upgrades they're bringing to the platform. Everything is extremely slick. The mobile app is extremely slick. The wallet integration is extremely slick. I can margin into the trenches if I want to get loans on the platform and take them off the platform to buy assets outside of the exchange. That's honestly one of the features that I really love. If you sign up, I'm gonna give you guys 20% off your fees, which is coming from my commission. So that's a forever discount. So sign up, come to Backpack. I think they're on their way to become a tier 1 exchange on all metrics. And yeah, it would be great if you guys can join. And without further ado, let's dive into what's going on in the markets. So, bigger picture. Bitcoin is roaring after the Sunday dump. We had quite a rough Sunday morning. I bottom coded a tweet on Twitter that I love to puke longs. Essentially, what I've been saying last week is that we need to hold 107, 108. Very important, very easy to understand. The last place that I set this had to hold was at 93 and at 102. So if we look at the chart here, we came into the level 106-ish. I'd say that's 107, 108. And here's a chart that I shared on Twitter earlier last week. This is Gann planetary lines from Nasser Hamoud. It's a great tool to chart prices against certain planetary angles. And a lot of people will kind of laugh at me, but this is Saturn at $100, and then we kind of expand, we double these prices, and as you can see, it's been leading into it's been leading the high time frame levels here for this cycle. And you can kind of take the $100 and split that into like thirds, and you'll see that this kind of aligns with thirds as well. So what I said basically is if we can manage to claim the level that we got rejected off twice here, and we can hold it, we're gonna most likely end up going for the next level. Shorter term, if we hold 107 to 108, that would assume that we go to at least 117. There's not really a lot to explain in that regard. We could take the previous support here at 106 that we kind of bounced off right now as well, and we can draw a fib extension. And then the 11618 is sitting around the 117 level. So that's a short-term target. If this doesn't turn sour, obviously there's resistance here. But if we go to the lower time frames, we can pretty much see that we've been testing it once, twice, 3 times. On a trading node, when you're in a bullish consolidation or in a bullish trend, you're often going to want to pay attention on, well, the retest of previous levels, but also 1, 2, 3. 3 is a magic number. You basically come down and then you reclaim it after the third swing. Usually is when it's bullish, it should start to run. Honestly, oftentimes when you come back for the fourth or the fifth test, it's gonna turn sour. Although this has changed a little bit since the institutions came to Bitcoin. This was a very useful rule back in 2018, 19, 2020. And after that, it kind of started to become a little bit vague. Where in 21 and 22, there were like specific cases where the fourth Dutch would actually be the one that would bounce. But generally, these are interesting setups. So if we can negotiate the resistance here, then I fully expect for price to trade into 117 and consolidate around the level a bit. So very straightforward. If we lose 108, then we're back into this range. But as you can see on the daily, we never really closed above the level, and we're doing so now, and we're retesting it, and we're bouncing off it. So I think all lights are green here. Then for ETH, if I remember correctly, I posted on Twitter that it's forming an over-under pattern. So essentially, we have this black line here, which is a weekly level. Let's see where I grabbed it off, where I took it off. Here. That's the weekly resistance, right? And then the monthly, which is the orange level, came off this resistance here. ETH is in the process of doing a reclaim back into this range between these two weekly levels. It was support here, resistance here. It's negotiating with it. Essentially, and it's nicer to view on like a 6 hour or something. Over, and then you have a low here. It went under into the support or the last consolidation, like where it started to find supply and the trend kind of slowed down. And then it jumped the creek, so to say. So this is like your spring. This is a reaccumulation, over, under, spring, jumping the creek. And then you come retesting, and note that it didn't sweep the high here into the mid-range. And in this specific occasion, it also coincides with the monthly level. So that's generally a great setup. This is a great setup here, where you have support, you have a little bit of a gap between the low here, and you sweep the low into the support, and then you reclaim it. So we talked about that. That was live on Twitter. Now we have the same going on here. Sweep the lows, reclaim the level. On the halfway, we've had, at least 3 moves, 1, 2, 3, which is kind of a requirement. You can also say 1, 2, 3. It's kind of a requirement for to start treating that mid-range. And if you have like a specific monthly or weekly level that's strong, that's large, to kind of commit. So I think here as well, all lights green to go to the next weekly or monthly level. And that's the beauty here. If this does indeed see continuation, and this is reaccumulation after such a strong move of 1800 and even like 1600, the extension becomes quite significant. So let me take a bit of coffee. If you say that this is the move and the rest of the year is the consolidation, and the consolidation stopped at the low here, this was the final pullback of the reaccumulation, then I mean, either you pick this level here, or you pick the level here. So let's be conservative. Bullish trends expand. They, generally the next move especially if you're charting on linear. It can be trends can expand to the 1618. So that aligns, the aligns with the weekly level here, and then the 1618 aligns with the monthly level here. And then it kind of depends whether you want to draw it here or here. But anyways, it gives you a range. Let's see. So this is the one-to-one extension. When you're charting on logarithmic scale, obviously there might be a bit, your expectation might need to be managed if you're going to use the 1-to-1 or the 1.618 extensions, because that only happens when things are truly like exponentially parabolic. So we can kind of draw the range for the 1-to-1, and then we do the same for the 1618. So we have some kind of reference here from the Fibonacci extension, and then they just happen to align with our weekly and the monthly level. So can ETH go all the way near to all-time highs relatively soon? I'd say it can. We go back to the fractal that I posted. There's actually two fractals. One fractal is this fractal that I posted way back in 2024, March 2024. ETH has done this Bitcoin fractal so far. So if we come here, let me just draw it on this chart. Let's see, ETH USD monthly. So let's do the comparison to Bitcoin in that period of time. So bam, bam, retrace, steep retrace into the support, into and then motor upwards. So I think that's kind of what's happening here. It aligns also with its own fractal from 2019 in a kind of different way, but it's comparable, I'd say. So yeah, bullish ETH, more propaganda. Total 2. We've entertained it last week. I'll repeat it. It wouldn't surprise me if we go sweep the highs here relatively soon in the next couple of 6 weeks. And yeah, I mean, it would be kind of brutal to come here and then smash it back down again, which is something that I mean, whoopsie. I wouldn't be too surprised to see that happen. Let's have a look here. So we've talked endlessly about August being a volatility pressure point, give or take a month, and it's too early to say, but if anything is going to happen in August, and that's just based off astrology, so you can laugh about it or not, but I have quite decent correlation that there is a pressure point and a moment in time where there's an opening to potentially go batshit crazy to the downside. It does kind of align with my theory here. So while of worry until then, we kind of, everyone's going to talk about, for example, the Japanese yields being a problem. If this starts to rise above 1.5 ish, let's see, this is closely to 1.5, and it starts to rise to, like, let's say 2%, it's going to cause a lot of problems. We're going to have, and we're going to see a lot of things going on through summer with, well, obviously tariff negotiations, and perhaps tariff negotiations are a giant distraction. And maybe credit is going to break. And if credit is going to break, especially if Japan goes haywire, that's, in my opinion, a moment in time where the Fed's kind of gotta step in. So we could see a huge pullback by then, and that huge pullback could erase most or not all of the gains that we see between now and then. So that's going to be very interesting to watch. That's kind of unknown. We'll have to kind of see if we see the evidence developing. So we talked about ETH, BTC, Bitcoin. Yeah, this was brutal, but essentially, if you consider the daily, it's just another retest. So I'd assume that if BTC holds here and ETH holds here and we go on a tear, that this is just gonna follow its next continuation. So I think that Bitcoin to $2 is not too crazy in the short term. We talked about Aave last week. The weekly, let's go to the Ichimoku, is promising. And what we said last week is that we see the span going through the price here, and we're negotiating the blue line here. I think this is going to come up into the magnet of the flat cloud and then pop above it and go on a crazy run into, eventually triple in price versus BTC during this next couple of months. This one is very important to watch. Let's go to the daily. This is the ETH to SOL ratio. There's a couple of things that I didn't talk about, but generally, when you have these wedges, you have either 5 moves or you have 9. So 9 touches. I'm always confused whether this needs like another move down. So 1, 2, 3, 4, 5, 6, 7, 8, 9. Or we don't count this one and we say, okay, 1, 2, 3, 4, 5, 6, 7, 8, 9. And then it kind of needs maybe this one. I don't think it needs that one. I think this is a completed like wedge. And considering everything that's lining up for ETH and generally my conviction in ETH, and I don't know if there's anything present for Solana in that regard. I think we're going to see a lot of institutional interest in ETH and a bunch of shit lining up for it. So that assumes this is going to break out here. And then the other thing is that we have hype. Hype is trading like a maniac, and for good reason. I think they're building something truly incredible. And it's also sucking a little bit of the mind share of Solana. They're truly trying to compete with Solana. And potentially what's happening here is that when there's 3 dogs fighting over a bone, there's gonna be one dog gets bitten, and it might be Solana. So yeah, maybe I'm not bearish on Solana. I just think it's not gonna perform as well. So it's just not being the fastest horse here. Hype, I think there's a resistance obviously around 40, 42, and then the next resistance is going to be around 47, and then into the 50s. This is a huge run. I think it has some room left, but there should be a little bit of a consolidation coming up as after we breach the all-time high. So here, SPX, we said the only bear case that can actually develop is once we get back down below this level here and get rejected of it. Essentially, my opinion has been, and I'll repeat it if you haven't watched the previous videos, but this was basically the last place that I wanted to see defended before becoming bullish. It's reclaimed and breached the level, like the range here. It's bouncing off the monthly, weekly level here. It's holding, apparently, for now, the level here. So any bearishness that can't materialize here is going to be fueled to the upside, because there's quite some, defensive positioning going on inside this kind of retrace, which, if the market was neutral, should have been at least, should have been able to reach like 5,600, or potentially all the way. Oh, that's a smiley. Okay, let's make him happy. All the way to 5,300, but it hasn't been able to. So it seems that this could become fuel into new all-time highs, and if that's the case, I'd say it's entirely possible that before anything bad happens, we're gonna keep climbing that wall of worry and getting to 6,900, or close to it. And if that's the case, this is obviously gonna explode. I was very annoyed. I've been very annoyed. I'm still very annoyed, I think, with Murad's messaging, and it kind of almost feels predatory, where he kind of preys on Gen Z's, helpless feelings. But this chart just definitely doesn't look bad. We kind of say that this was resistance before it kind of started to rise to these levels around 1.6, almost $2. It was a resistance here as well. We negotiated with the level in May, it got rejected, and now it's back above it, and it's making new highs. It's kind of seemingly finding support here. And if the story is going to be that that SPX is going to go to 6,900, well, it only makes sense that this is going to reach into higher levels, double from here. So want to really watch and appreciate. Obviously, when the market's bullish, it seems that it's only logical to be bullish on exchange assets, because, well, volumes are going to go up. It's the same with hype. If your exchange grows in volume, that should be represented in your token. So I'm gonna chart this one out next week, but this looks heavy. Like, it's got rejected. It's got rejected a few times, but it really haven't, so only once it made progress below the lows, and then we reclaimed it. It's essentially the same setup as ETH that I showed you earlier. You have the over, the under, and then you come, you come retesting the middle of the thing. The only thing that happened here is that it made a new high and then closed back below the previous high, which in my opinion is probably why it kind of went lower than the mid-range. It came back down to test the range low, but it's now kind of motoring out of it. So this essentially is a 4-year consolidation into continuation. So I don't know. Let's say the move started here, went all the way up to here, and this is the last kind of retest of the thing. There's a lot of upside, and note that this, this should almost be charted on a logarithmic scale, because this is just a lot of time and a lot of space. So that kind of looks really promising. I'm gonna chart this one out and see what I want to, like, if I can get any exposure to this. We talked about AVE, yeah. So EOS, it's kind of performing poorly ever since I said I wanted to get it back, but I think this is forming a bottom. I love to watch the Ichi to kind of spot these. I mean, it's not looking too great. I need to dive into and revisit whether this is a great trade or not, but I'll do that next week, or during this week, and then kind of report on it next week. I think that's kind of a good summary of what's going on. Not too sure what's gold doing here. It's kind of rising on the tariff shit again. But if the tariff stuff kind of, gets resolved, this is probably gonna still come down into 2800. But it's kind of being slow right now. So possibly this scenario is still actually going on, and then we go into 3800. I would almost say that's more probable now, because this is taking its time, and would have expected to kind of not get back here. So I think this is a full consolidation / correction, and this can go higher. Anything else that I forgot? Yeah, this is kind of, we talked about it last week. We talked about it before. This is looking very shitty. And the thing is that at this point, so long-term treasury rates are going up, like the US 10, the US 30, whatever. And that's creating all kinds of unrealized losses on a bunch of balance sheets. And they are papering over it by saying, well, you don't have to report them and you can basically ignore them, but they're still there, So if this goes down and there is one party that needs to kind of start to, there's one party that's forced to realize their losses, that's going to cause a giant cascade. And the Fed cutting is not going to cut it, because the Fed cutting is going to raise inflation expectations. And inflation expectations are going to create a situation where where demand for long-term treasuries will go down, or at least whoever is lending money to the government is going to demand a higher interest rate, because they will lock it for 10 years or 30 years or whatever kind of time they will lock it, and they expect a higher inflation during that period of time. That means that they're going to demand a higher interest rate to cover their assets and hedge that inflation. And that's problematic. So that means, a long story short, it most likely, if they start to cut to create liquidity to support the market, they're going to exacerbate the long-term treasury yield flying upwards, which probably means that we'll have to start buying the long-term treasury rate, treasuries, to cap the yield. So then you get like a kind of yield curve control. Or they don't do it, and then these treasuries go down the drain so extensively that the whole shit is gonna explode. So yeah. Anyways, that's just that's on the horizon, and it may coincide with my view on August, and well, all the bearishness that comes from whatever is being thrown our way in the like next 2 months hopefully becomes fuel to kind of get everyone to the point where asset prices are so lush that everyone thinks, oh, it doesn't matter that these long-term treasury rates are going through the roof and that these treasuries are dumping like a crazy madman, and that it doesn't matter that anyone has like these gigantic losses on their balance sheet if at the same time Japan doesn't manage to kind of cap their yields. Yeah, that ties into the dollar. I'm not really sure, but if those long-term treasury rates go up and Japan has to kind of start pouring a lot of inflation into their system to buy their long-term treasury rates to cap that yield or to defend that yield, in my opinion, that should be bullish on the dollar. So still this chart here, kind of, in my opinion, when that shit hits the fan, we're probably going to have this weird situation where the dollar is going to soar during that period of time where we see the market stress increase in potentially. I mean, I don't know if it's going to happen, but in August. So that's kind of the short term and the long term outlook, and the things to watch out for. Short term, I'd say we're bullish as fuck, and I might be wrong, and if I'm wrong, I'm gonna eat it. But I don't want to be the guy that isn't long when things are actually looking pretty great. So, guys, I hope you enjoyed that one. It was 32 minutes instead of 23. We just changed the digits, and that was giant propaganda. Hope you enjoyed that one. Subscribe to the channel, register with Backpack, and I'll catch you next week.